What are financial statements? Financial statements are important documents that provide a snapshot or overview of a company's financial performance and position over a specific period. There are four main statements in the set of financial statements. These include the statement of financial position, also known as the balance sheet, the statement of profit or loss and other comprehensive income, more commonly referred to as the income statement or profit and loss statement, the statement of changes in equity, and the statement of cash flows. Let's briefly discuss each of them. The balance sheet or statement of financial position provides a snapshot of a company's financial position at a specific point in time. The balance sheet also includes all the assets, equity, and liabilities of a company. The balances presented in the balance sheet are the closing balances for the financial period selected. Next, let's refer to the profit and loss statement. The profit and loss statement summarizes a company's revenue, costs, and expenses over a specific period. As you can see, included in this statement is all revenue, cost of sales, other expenses, and other income. The figures presented are the movement for the period, since income and expense accounts do not have opening balances. Next, let's look at the statement of changes in equity. The statement of changes in equity provides more detail into the movement in your equity and capital reserve accounts. And lastly, let's look at the cash flow statement. The cash flow statement provides more detail into the actual cash movements of a company. This is broken down into three activities known as operating activities, investing activities, and financing activities. Cash flows from operating activities are known as cash flows from day-to-day business operations, including receipts from customers and payments to suppliers. Investing activity includes cash flows related to the purchase and sale of long-term assets, such as property, plant and equipment, and investments. And then lastly, financing activities include cash flows from activities that affect the company's capital structure, such as issuing or repurchasing of stock, paying dividends, or in this case, proceeds from or repayment of borrowings. Financial statements are crucial for several reasons. The financial statements are used by stakeholders as they provide critical insights into a company's financial health and performance. This will aid in decision making and offering a snapshot of the company's profitability, liquidity, and solvency. Investors use financial statements to assess a company's value, while creditors evaluate creditworthiness from the financial statements. Additionally, these statements assist in forecasting, internal management decisions, and regulatory compliance. I want to show you a financial statement drafted from SIFT software. Here you can find a set of financial statements draft for Jay's Cupcake Company for the financial year ending December 2023. This is the style that has been applied with their little logo, with a table of contents, an accountant's report, some general information, accounting policies applicable to the entity, and then you can find your four main statements, including the balance sheet, profit and loss, statement of changes in equity, and the cash flow statement. Next, we can find the notes to the balance sheet, notes to profit and loss, and the notes to the cash flow statement. As you can see, these financial statements are useful but also beautiful, and we hope that you can create your set of financial statements by using SIFT's software.